When you think about Australia's economy, it almost seems bulletproof. We're talking about a country blessed with endless natural resources, strong and growing ties to the booming economies of Asia, and a relatively small population that should, in theory, make wealth distribution a lot easier. All the basic ingredients for long-term success are right there, neatly lined up. But lately, if you look a little closer, some cracks are starting to show. Australia isn't just facing challenges at home, rising costs of living, housing crises, and growing inequality. It's also running into trouble with its key trading partners. Countries that once couldn't get enough of Australian exports are now starting to pull back. They're rethinking long-standing deals, reducing their reliance on Australia's products, or in some cases, actively looking elsewhere for what they need. And here's the scary part. This isn't just a temporary blip. If these shifts continue, Australia's future wealth and stability could be seriously undermined. The economic landscape is changing fast, and Australia's position in it is looking a lot less secure than it used to. So let's break it down. Here are 8 countries that are turning away from Australia, economically, and why. China. China is Australia's largest trading partner. No contest. In 2022, two-way trade between the two countries reached around 287 billion Australian dollars, a massive figure that's been vital to Australia's economic growth. For years, the relationship was built mainly on Australian raw materials, especially iron ore, feeding China's industrial boom. But since 2020, that relationship has been under serious strain. It all started when Australia called for an independent investigation into the origins of COVID-19. China didn't take it lightly. Almost immediately, they hit back with a wave of trade strikes, throwing tariffs on key Australian exports like barley, beef, and wine. They banned imports of Australian coal, tightened inspections on seafood, timber, and other goods, and made it clear that Australia was being punished economically. Now, even though some trade has recovered, mainly because China still needs Australian iron ore to keep its industries running, the damage to the relationship is obvious. Trust is broken. China has been working hard to diversify its supply chains to avoid relying so heavily on Australia. They're investing billions into African mining operations, boosting imports from Brazil, and signing deals with other countries to replace Australian products wherever possible. For Australia, this shift is a massive economic threat. Losing even part of that Chinese demand would mean serious hits to export earnings, government revenue, and thousands of jobs tied to mining, agriculture, and shipping. It's a reminder that putting too many eggs in one basket, even a very big one, can backfire badly. France. You might not think of France as a major economic partner for Australia, but they were set to be. The two countries were gearing up for a huge $90 billion submarine contract. And this wasn't just about buying some military hardware. It was about jobs, technology transfers, industrial supply chains, and long-term partnerships that would have given Australia a major foothold in advanced manufacturing. But everything changed almost overnight. In 2021, Australia scrapped the deal without warning and instead joined the AUKUS Security Pact with the US and the UK. Under AUKUS, Australia agreed to buy nuclear-powered submarines from its Anglo allies, completely cutting France out of the picture. France was furious, and not just hurt, but strategically angry. It wasn't only about losing the contract, it was about trust, influence, and reputation. France recalled its ambassadors and publicly accused Australia of betrayal. More importantly, France holds major sway inside the European Union. And after the fallout, French leaders made it clear they would not make life easy for Australia in Europe. They've since used their influence to slow down negotiations for an Australia-EU free trade agreement, a deal that Australia badly needs if it wants to diversify away from China and Asia. If Australia loses easy access to the massive European market, over 450 million consumers, it's going to be much harder to find new buyers for its goods and services. In a world where trade is getting more competitive, that's a big economic blow Australia can't afford. Indonesia. Indonesia is Australia's closest neighbor to the north and one of the fastest-growing economies in the world. On paper, the two countries should be natural trade partners. Geographically close, complementary industries, huge potential for growth. It all sounds like a perfect match. But in reality, the relationship has been slow, awkward, and underwhelming. Even though they signed the Indonesia-Australia Comprehensive Economic Partnership Agreement, IA-CEPA, back in 2020, it hasn't delivered the boom in trade and investment that many were hoping for. One major reason? Indonesian businesses often see Australia as difficult to deal with. In key areas like agriculture, Australia is extremely protective of its own farmers. Quotas, tough standards, and slow approvals make it hard for Indonesian exporters to compete. Meanwhile, Australia's approach can sometimes come across as a bit heavy-handed, more about protecting its own interests than building a true partnership. There's also history that hasn't been forgotten. Australia's strict immigration policies, especially around asylum seekers who pass through Indonesia, left a bad taste. Diplomatic tensions over things like spying scandals and travel warnings haven't helped either. The result? Indonesia is increasingly looking elsewhere, strengthening ties with China, Japan, South Korea, and the United States, where they see faster growing opportunities and fewer political headaches. Bottom line, while Indonesia's economy is booming, Australia hasn't been able to ride that wave properly. And without fixing the trust and trade barriers, Australia risks being left behind in one of the most important markets right on its doorstep. India? India is another country that Australia keeps chasing, and honestly, it makes total sense. India's middle class is booming. We're talking about hundreds of millions of people demanding more energy, better education, higher quality food, and modern services. For a country like Australia, with its rich resources and strong education sector, India should be a massive opportunity. In 2022, Australia and India signed the Australia-India Economic Cooperation and Trade Agreement, or AIECTE for short. It slashed tariffs on a range of Australian exports like coal, wine, and sheep meat. On paper, it looked like a huge step forward, finally unlocking a massive market with enormous potential. But here's the catch. Trust issues run deep. For years, Australia blocked key Indian agricultural exports, especially sugar and grains, to protect its own farmers. That left a bad taste. Indian exporters still remember how hard it was to access Australian markets, and they're not rushing back in without caution. Even at the government level, India is moving slowly. They're not throwing open the doors to Australian services, investment, or technology the way Australia would like. In fact, India is prioritizing self-reliance in key industries, a strategy they call Atmanirbhar Bharat, meaning they want to reduce dependence on foreign suppliers, not increase it. So, while the free trade agreement made for good headlines, the reality is more complicated. If Australia wants to really tap into India's growth story, it's going to take years of building trust, fixing past mistakes, and proving it's a reliable, long-term partner, not just chasing short-term deals. Malaysia. Malaysia should be a natural economic partner for Australia. The two countries have a lot in common when it comes to agriculture, education, and even tourism. For a while, things looked promising. Australian universities were popular with Malaysian students, and trade in food products was steady and reliable. But lately, there's been growing friction, and it's starting to show. A big part of it comes from Australia's heavy focus on military alliances, especially AUKUS. Malaysia sees AUKUS and the move toward nuclear-powered submarines as destabilizing for the region. They worry it could spark an arms race in Southeast Asia, and they've been pretty vocal about their concerns. That political tension doesn't just stay in the defense world, it spills over into economics. Malaysia is now being a lot more cautious about deepening ties with countries seen as stirring up regional tensions. Instead, they're leaning toward deals with partners who feel more neutral and less likely to drag the region into great power rivalries. There's also another factor. Malaysia is racing to build its own industries. Palm oil, technology, finance, and manufacturing are top priorities. And when they look for trade partners, they want markets where they can push their exports aggressively. Australia's strict standards, complex regulations, and focus on protecting local industries can make it feel like more trouble than it's worth. Malaysia isn't cutting Australia off. Trade and student exchanges are still happening. But the relationship has cooled, and Australia, once near the front of the line, is now being quietly edged aside. Pacific Island nations. Australia has always considered the Pacific Islands its economic backyard, a region where it holds major influence through aid, trade, and diplomatic support. For decades, Australia was the biggest player by far, using generous funding packages to build close ties with countries like Fiji, Papua New Guinea, Samoa, and others. But that dominance is changing, and fast. Many Pacific nations are growing frustrated. They feel that Australia talks a lot about partnership, but when it comes to delivering real infrastructure, investment, and, most importantly, action on climate change, Australia falls short. For these island nations, climate change isn't just a political issue. It's an existential threat. Rising sea levels, stronger storms, and disappearing coastlines are happening now, and many leaders feel Australia isn't taking their concerns seriously enough. Into that gap steps China. Over the past few years, China has been offering major economic packages, funding new roads, ports, hospitals, and power plants, and they're offering it with fewer political conditions than Australia or traditional Western donors usually attach. For many Pacific governments, it's a tempting deal. For the first time in decades, Australia's economic influence in the Pacific is facing serious competition. It's not just about losing trade deals. It's about losing strategic ground in a region critical to Australia's security and economic future. If Australia can't rebuild trust and step up its investment game, it risks being sidelined in its own neighborhood. The European Union, EU. Finally, we have the European Union, one of the world's largest and most influential economic blocs. Australia has been trying to lock down a free trade agreement with the EU for years now, hoping to break into a market of 450 million consumers and diversify its economic base away from Asia. But the process has been slow and painful, with talks dragging on and little progress to show for it. One of the biggest sticking points is Australia's environmental policies. The EU has been pushing hard for stronger climate commitments from Australia, things like carbon pricing, a faster transition to cleaner energy, and more sustainable farming practices. But Australia, still heavily reliant on coal and other fossil fuels, hasn't exactly been seen as a leader on climate action. In fact, many European leaders view Australia as not serious enough when it comes to addressing global warming. Then, of course, there's the fallout from the submarine deal with France. After Australia dumped France in favor of the AUKUS Security Pact, many European countries became even more skeptical about partnering with Australia on anything too deep. Trust, once broken, is hard to rebuild, especially when it comes to trade and economic cooperation. If Australia can't make a deal with the EU, it misses out on one of the world's most lucrative markets, and that's a major blow to its plans for economic diversification. Losing that access would seriously limit Australia's options for growing its economy outside the Asia-Pacific region. Vietnam. Vietnam's economy is booming, and with that growth comes a major shift in how the country approaches trade. For years, Australia has been a reliable supplier to Vietnam, exporting wheat, beef, education services, and a range of raw materials. But as Vietnam's economy matures and competition heats up, it's starting to get a lot choosier about where it sources its goods. Regional proximity matters more than ever. Vietnam is increasingly leaning on its immediate neighbors like Thailand, Malaysia, and even China for faster, cheaper access to goods. Thanks to trade agreements like the CPTPP, Comprehensive and Progressive Agreement for Trans-Pacific Partnership, and the RCEP, Regional Comprehensive Economic Partnership, Vietnam now has a lot more options, and many of them are closer and more cost-effective than Australia. There's also a perception issue. Australian goods are often seen as premium, high quality, but with a matching price tag. In a rapidly developing economy like Vietnam's, where price sensitivity remains high, that's not always a winning combination. Even in the education sector, where Australia was once a dominant player, Vietnamese students are increasingly considering cheaper alternatives like Japan, South Korea, and even European universities. If this trend continues, Australia could find itself losing critical market share in one of Asia's most dynamic and fastest-growing economies. It's a warning sign that Australia can't rely on past relationships alone. Staying competitive in price, speed, and adaptability is going to be key moving forward. The big picture. When you look at these countries, a clear trend emerges. Australia is losing economic friends. It's not just about bad headlines or diplomatic dramas. It's much deeper than that. We're talking about delayed trade deals, restricted market access, lost investments, and most critically, trust that's been eroded over time. The reality is that Australia's economy remains dangerously dependent on a narrow range of exports: iron ore, coal, gas, and education. If more countries start backing away, or if China pulls back completely, Australia could face a serious economic downturn. If Australia wants to secure its economic future, it needs to take immediate action. It must diversify its economy beyond resources, mend strained diplomatic relationships, take climate change seriously to unlock deals with the EU and Pacific nations, and work harder to build trust in fast-growing markets like India and Southeast Asia. Because right now, Australia is at a crossroads. If it can rebuild economic trust, it will remain strong. If not, the golden run it's enjoyed for decades could quickly begin to fade. Thank you for watching. We'll catch you in the next one.